Let's be honest, dealing with GST can sometimes feel like you're trying to solve a giant puzzle, right? Well, today we're going to focus on one of the biggest pieces of that puzzle, e-invoicing. I know, it sounds pretty technical, but stick with me for just a few minutes and you'll see it's actually way simpler than you might think.
So when you hear about a new GST regulation, what's your gut reaction? Probably a bit of a sigh, thinking, oh great, another rule to follow. It's so easy to look at e-invoicing and just see it as one more compliance headache. But is that really all it is? Or is there actually an opportunity hidden in there?
So here's our game plan for today. We're going to start with the basics. What exactly is e-invoicing? Then we'll figure out if this is something you even need to worry about. After that, we'll get to the good stuff, the actual benefits for your business. Then we'll walk through how the whole system works, step by step. And finally, we'll cover the really critical rules and penalties you definitely don't want to ignore. All right, first things first, let's clear up exactly what we're talking about when we say e-invoicing.
The key thing to get here is that e-invoicing isn't about creating some brand new type of digital invoice from scratch. A better way to think about it is like getting a document notarized. You're taking your normal business-to-business invoices and just getting them officially stamped or authenticated by the government system, the GST network, through a special online portal.
And this, right here, is probably the biggest myth we need to bust. You do not, I repeat, do not create your invoices on the government's website. You keep creating them in your own accounting software, your Tally, your Zoho, whatever you use, just like you always have. The only difference is now you have to report that invoice to the government's portal to get it officially validated.
Okay, so that brings up the million-dollar question. Who actually needs to do this? Let's run a quick test and see if your business fits the bill.
The government has been rolling this out in stages, and you can see the trend pretty clearly. It started back in 2020 with the absolute giants, companies with a 500 crore turnover. But look at how that number has dropped year after year. The net keeps getting wider and wider, pulling in more and more businesses.
And this is the magic number you need to remember today, 5 crore rupees. If your business has hit an aggregate annual turnover of 5 crores or more in any financial year since 2017, well, then e-invoicing is mandatory for you. And remember, that's your total turnover across all your GST registrations under a single PAN.
But of course, there are always a few exceptions. If your business falls into one of these specific categories, like you're an SEZ unit, a bank, or a goods transport agency, for example, then you are exempt from this no matter what your turnover is. Now that we know who's in and who's out, let's talk about the payoff. Because this is so much more than just a new rule to follow. If you get this right, it can bring some pretty serious advantages to your business.
Honestly, this can be a total game changer for your workflow. Think about it. No more manual data entry errors because everything's standardized. And that verified data, it automatically fills out your GSTR1 returns and your e-way bills for you. We're talking about saving a massive amount of time and hassle. Plus, you get your input tax credit back faster. And because the whole system is so transparent, the chance of a tax audit goes way, way down.
Okay, so what does this actually look like day to day? It sounds complicated, but the actual process is pretty straightforward. Let's walk through it.
It really boils down to 4 simple steps. 1, you just create an invoice in your accounting software like you always do. 2, your software converts that data into a special format, a JSON file, and sends it up to the IRP. 3, the portal's computers instantly check it, make sure it's not a duplicate, and slap a unique ID number and a QR code on it. And 4, that now official e-invoice comes right back to your system. Now here's the part you can't forget. You have to print that QR code on the final invoice you hand over to your customer. That's the proof it's been registered.
And finally, let's get to the bottom line, the rules you just can't break and what happens if you do. This is where you'll want to pay close attention.
So, what happens if you make a mistake? Well, you are on the clock. You have exactly 24 hours to cancel that e-invoice on the registration portal. If you miss that window, you can still fix it, but you'll have to do it manually on the main GST portal, which is a much bigger headache. So, speed is everything.
And trust me, you don't want to get this wrong, because the penalties are steep. If you just don't generate an e-invoice when you're supposed to, the fine is 100% of the tax due or 10,000 rupees, whichever is more. And for an incorrect invoice, that's a flat 25,000 rupees for each invoice. You can see how fast that would add up. So, when you zoom out and look at the big picture, what does this all mean? Well, e-invoicing isn't just another regulation. It's a fundamental change, pushing us all towards a fully digital, interconnected tax system.
It's about creating a common language that all our accounting systems can speak, connecting the dots in real time.
With that turnover threshold dropping all the time and the system getting smarter every year, the direction we're headed in is crystal clear. So that leaves us with one final thought to chew on. The future of tax is digital. The only real question left is your business ready for it? Thanks for tuning in.